Get that light on. We can barely see your beautiful face. Dude, so how was Austin?
It was nice. Texas is, it was not what I expected for Texas, actually. I was expecting like cowboys. A bunch of hippies running around smoking weed.
Hey everybody, it's The Flow Show. I'm your boy Chicago Sean, joined as always by Steve Strazza, our Director of Research. What's up, Strazza?
Not much. How's it going over there?
Oh, you know, just came off a nice long weekend, little family time up in the mountains. How about you?
Yeah, it's lovely. I love 4th of July, so that was fun. And now we got some action coming back on a Tuesday with a short week. And markets are moving again.
We got some action. So for those who haven't seen The Flow Show before, this is a show where we talk about unusual options activity, or at least we talk about what we're seeing in the unusual options activity and see if that can direct us into an interesting trade. And we don't plan what we're going to say ahead of time. Strazza likes to spring this on me. We're improvising here. It's all good. So you guys can kind of see how we go through our process of crafting options trades. So with that little intro, Strazza, this week's Follow the Flow report, what anything stand out this week?
We had a nice mix this week. I would say there's a good amount of cyclical stocks here. So a lot of materials names, silver miners, the iShares ETF, SLV, Cleveland Cliffs, Freeport McMoran. So there's a nice mix of those in there. But then there's also a lot of, there's also the Explorers and Producers ETF, XOP, some bullish flow. There's also a lot of growth stocks, like these long duration ARChy stocks, Pinterest, Nikola, Lucid. Oh, those are both EV makers, right?
Yep.
Oh, both bullish flow in the EV makers, Nikola and Lucid, bearish flow in Ford. Bearish trade?
Well, yeah, perhaps. Okay, so the Follow the Flow report you got right now, it looks like at first glance as I look at it, looks like we see a lot more activity on the call side than on the put side. Am I reading that right?
It's always the case. Having four, bearish stocks in here, or bearish items in here, is actually more than we've seen lately, right?
Right. So where do you think some of this call activity is aggressive versus call activity that, a little bit wishy-washy, if that makes sense?
Well, it's interesting, right? Because even, I talk about how there's a fair amount of ARC stocks in here. Okta's another one, Pinduoduo. I don't know if Twitter technically is or not, but, social media fits that mold. Then there's bearish flow in ARC itself.
That is very interesting. Maybe a little hedge going on, sell the index, buy the components kind of situation?
Yeah, interestingly enough, I was looking at a lot of these names. I like Pinduoduo. Here's the chart. We put a trade on this yesterday. We put the trade out there, but we're only buying on strength, so haven't entered it yet. We'll be buying on a breakout, this little coil, both it says 70 here. It's really about 68. But it looks pretty good. And interestingly enough, this falls into that Chinese internet group, right? And we've been talking about a lot internally. So I know, but these stocks bottomed in March. So the rest of the market, has been falling all throughout Q2, selling off aggressively, most areas. And these Chinese internet stocks carving out nice bases. I think this is a pretty nice vehicle. What are you seeing there?
Yeah. So how did you pronounce that? Pinduoduo?
Listen, I have no idea if that's how you say it.
I don't know either. I'm asking. I thought it was Pinduoduo, but I'm just being literal with the spelling. I don't know.
Phonetically, sure. I think we could go with that.
Hey, I'm not saying I'm right and you're wrong. I just, Anyway, so looking at your chart, the chart that you've got there, I love the chart setup. I love that breakout in relative strength. Yeah. If you flip over to my chart here, when you look at the implied volatility on the lower pane, we are well off the highs of the implied volatility that we saw in March.
Yeah.
But we're still, that's still high. If you widen the lens out to earlier, this time last year, we were much lower. So I would be hard pressed to be a buyer of calls if I wanted to express a bullish bet here. Probably the play I would look at would be some kind of call spread. Maybe a bull call spread. Let's keep it as simple as possible. So let's open up the chain here real quick. I'm pretty sure we've got very liquid options here. Yes, we do. How did I know that so quickly? A little shorthand. Pretty often, if you see that the stock has weekly options, that's a safe bet that that's got a very robust options market. That's why they offer the weeklies, to give options traders more choices, because there's a lot of volume there.
This is actually one of the larger stocks, like in the Chinese Internet ETF. It's one of the bigger names out there.
That would make sense. So if I were to look at an options trader, I'd probably go into October options at the earliest. That's a little bit more than 3 months expiration right now. We don't have a September contract. So October is where I would look. Let me bring that chart back up here. So 70, we probably want to buy that breakout above 70.
Yeah.
I see on your chart, you got a measured move up at 105. We probably don't need to go that far for an options trade to have a good options trade, but let's just check something out here. If I if I bought a 70 call, and then sold, there's a nice premium there at the 90 strike. We can get, we could sell it for $4. If I crafted this as a 90, let me, there we go. We'd be paying about $5.33, or say $5.35 for that spread. I like that, right? It's the most that spread could be worth is 20. So back of the envelope math, it's not quite a 4-to-1, reward to risk profile on a bull call spread like that. Oops, let me drop the little analyze tab so you guys can see what that looks like. So if we were to put a trade similar to this on, this is what the P&L graph would look like. The break even would be right around 70, I'll call 75 and a quarter. So if at expiration in October, PDD was anywhere above 75 and a quarter, this trade would be profitable. I like selling. A 70-90 bull call spread for $5.35 seems like a good trade. I like that we got $4 of premium to sell in those October options at 90 right there.
If we bought on strength, say 2 points higher, would you still be able to get in?
You'll pay more than what is offered right now at $5.35, but I don't think you'd pay a whole lot more for waiting because we have until October. I think if the move happened within the next day or two, maybe we'd pay $5.50.
Yeah.
I don't think it'd be that much higher, but look, I like the spread only because of the implied volatility being so high. Also, yes, there's relative strength that's been coming in here, and yes, it's put in a pretty nice bottom down here. But because this thing has come from much higher prices, right? It traded close, around 200 at one point. There will be times on this rise where we're going to run into some overhead supply. I'm not telling you anything you don't know.
Totally.
But I guess that's just the reason why I wouldn't be wildly bullish here just by calls for all of these reasons. I think a bull call spread makes a little bit more sense. For those who are into that sort of thing, maybe you could sell a naked put here. I wouldn't be comfortable selling a naked put, Strazza. I don't like selling naked puts in anything in China. The word China and naked puts sounds like bad news to me.
And from a technical standpoint too, you want to be patient and let it resolve higher first, then put this kind of trade on. We're in an environment where we want these stocks to all prove themselves to us. And while this is an area of relative strength right now. If you zoom out on this chart, it's been going down for a long time, right? This is the very early stages of a reversal. These bases can take time. You could very well see, on the chart here, I could have drawn this like a little head and shouldery type thing. Maybe it takes a little longer for a right shoulder to form. Be a month or two from now before we actually get a base breakout. But we'll see. They do look good. Hey, I'm interested. What's the implied vol look like for K-Web these days?
K-Web. Let's pull it up. It kind of looks a lot like the PDD. Similar thing, right? We had a big spike in March when everything was selling off in China, and then it's off significantly from those highs, but still relatively high, if you ignore the price action from basically from March 1st until now, then we're at the top of the range that we had been in the previous 9 months. So, a nearly identical situation as Pinduoduo, if I said that right. Pinduoduo.
We'll find out how to say this name, and we'll talk about it. Yeah, I'll let you know. But that's it. I mean, there's not a lot of opportunities out here. This weekend, while I was going through the list, looking for something to write about in the post, I almost did I call it like a no-name post. I'm going to say there's nothing on this list because that's how bad setups are these days. I mean, this is the best we have to choose from in many regards.
Man, there used to be a great bar in Buffalo when I was in college called No Names. Just thought I'd throw that out there. You just told me, you just put me in the Wayback Machine right there. Thank you for that. All right, so Pinduoduo is the trade that from the Follow the Flow list seems to have the most to offer here because we do like the chart setup. It does have the potential for a run. And look, even if we got into this trade and we did buy a 70-90 call spread and the stock did in fact move to that measured move of 105, it absolutely could run into some upper resistance there, which is what I was worried about. But hey, if that's where it runs into resistance, Strazza, our spread is going to make money. It's going to work out. So, totally. We're good. So I like this setup. We don't need a big move. We don't need it to go back to all-time highs to make money. We're just kind of, what's that?
50% upside there.
Yeah, I mean,
money.
I like it. All right, Strazza. Well, that's how we make lemons out of lemonade when you got high vol and you're bullish. We use a spread. We use that out of the money premium to improve our odds of success by lowering the cost of participation. We've got defined risk. So, hey, this is a China name, right? Yeah. A headline out of China can spook people, and this stock could get cut in half overnight. We've seen it before. It'll happen again. But with our defined risk spread, at least we could size the trade in such a way that if we were to lose 100% of our capital on that trade, it wouldn't be, be manageable. We know what that loss is up front. So that puts us in a position of strength. Strazza, great job. Thanks. Great to reconnect with you after the long weekend. I hope we have a great trading week, and I might see you tomorrow for the options trade of the week.
See you then.